we are seeing as of today, it's more about the utilization of the blockchain platforms as well. And it has got a great potential. And I'm sure we are going to see that transformation in sooner rather than later. But let's look into what is really happening into the cross-border payment and what are the challenges. The infrastructure is the major hurdle in the transformation. We need an infrastructure that integrates both with regional and global payment methods, because the requirements of a customer, whether it's a B2C or B2B, are both. So you have to cater to both the customers in a more efficient way. It's all about the various payment methods, because obviously as a merchant or as a service provider, you do not want to interact with the multiple platforms and the services. You're looking for the consolidation. And basically with that consolidation, what you're really looking at, the language in which the platform can speak to each other. And I'm sure you must have heard about ISO 20022. Yes, that is what's going to make a difference as well, because then the platforms and services and the systems are going to speak into the similar languages. And that is going to lead an efficient transactions, and it will reduce the number of failed transactions in the overall payment structure. Now, when we talk about the data management, it's one of the most critical part into the cross-border payment. The reason is, when you are managing the various payment methods, you do not want to interact with the various platform services and the data. And that's where the data management plays a significant role in the cross-border transactions or the overall payment infrastructure. At the same time, transparency and the trust. Once you lose a customer, you're not going to get them back. So you got to be a bit more transparent and trustworthy. And these are the fundamentals for a better infrastructure for payments. And that's where the cross-border payment infrastructure is moving towards. And what we have seen in the payment landscape specifically, there's a huge technology evolution. We have come from the monolithic platform to the modern platform, which is like infrastructure as a code. It is in part and parcel. If we say all the platforms have adopted the cloud technologies, that is not true. But we are looking into the future, where we would be looking at the container as a service or even payments as a service. So if you are a service provider, or if you're a financial institution or a bank, you don't need to build services. You can just get the payment as a service from the various service providers. And that's a major value stream. So the whole payment landscape is going through transformation. And we have already seen that through the numbers. The evolution of the financial institutions, if I'll take you back in 2010 versus 2020. So here's the companies which were the top 10 in 2010 with their market cap, and look into the right side, which is 2020. So 10 years back, the top 10 financial institutions were dominated by US and the Chinese banks. Today, 5 of the 10 institutions are platform-based. Look into Visa, look into Mastercard, PayPal, Tencent. And this is not ending. So there's a clear transformation. Now, the only way forward is to become a platform-based economy. And what fintechs have done over the period of time, they looked into the problem, understood the problem pretty well, and they solved the problem for both sides of the customer. Whether you consider a payments platform or open banking platform. So the fintechs are making a huge difference into the payments landscape. Whether you consider that from the ranking perspective or the market capitalization, all these companies, top 10 fintech companies, are based on payments. Stripe, Square, Coinbase, Grab, and all of them, they are evolving and revolving around payments. And they are making it life easier for the businesses to grow and evolve. If you would like to make your customer to accept or make payments, you can directly take that as a service from any one of them and you get going. You don't have to worry about it. There are multiple value streams in the payments. So generally when we make a payment, you swipe a card at a machine, there's a lot goes behind the scenes. There are multiple value streams and the multiple players. I'm not just talking about the issuers and the acquirers. Yes, there are gateways and the processors and variety of others. And I'm sure I've got a lot more courses in which I can talk to you in detail about it. Here, when we talk about the payments, especially today, there's one thing which we hear quite a lot. It's about the digital asset and the advent of the digital asset from 2009, and that is a Bitcoin. Yes, we have seen a significant movement in Bitcoin from early days until today, which is hovering around $64,000 per Bitcoin. Yes, it's a significantly volatile as well. The price movements are volatile, but it's all due to the regulatory and the compliances as well. The lack of regulatory and compliances today making this market to go a bit volatile. Yes, we are looking at the regulation and compliances in the digital assets environment as well. I'm sure you can argue about, but SEC is going ahead with the ETF for the Bitcoin. Yes, that is happening. And I'm sure that will have a positive impact on the digital assets in the near term. So again, it's a very interesting part, which I really want to talk about. When we talk about payments, generally people consider payments as card transactions, as the retail or the B2B transactions. Let me give you a view on the city, and that's a Citibank. Citibank has got a business unit called Treasury and Trade Solutions. It's very well known as a Citi TTS. TTS forms 30% of the city's business in terms of the global revenue. And that takes away 22% of city's global profits. So you would imagine a bank, a global bank, their 22% revenue just comes from the treasury and trade solution business. And that just evolves and revolves around payments. And that is not even your core banking. On the other hand, when we talk about the card networks, likes of Visa, likes of MasterCard, or the other payment card companies or the card networks, general assumption is these card networks, their major revenue comes from the transaction. But let me clarify, only 1/3 of their revenue is from the card transactions. As I said earlier, there are multiple value streams in payment. And what card networks and the other payment businesses have realized that the market is disrupting. So they've already started focusing on the multiple value streams. And so an interesting fact, the best data is held by the payment companies. So when we look into the payments and banks, the card networks, and I'm sure you heard quite a lot about the CBDCs. What does that really mean? Central bank digital currency, because here at one hand we talk about the Bitcoin and the multiple other digital currencies which are available in the market. So why central bank is after the digital currency? The reason is because central bank is focused around we hear quite a lot about the central banks and their digital currencies. Central bank is focused on issuing the digital currency over the period of time. There are many initiatives which are going on at the moment globally. One of such projects is focused around the cross-border payments. That's called Project Denver, where quite a few central banks came together and they are working on a platform infrastructure for cross-border payments. But like the central bank is basically managing the money. Now there are two parts. They issue the bank notes, which is the cash, which is in rotation in the B2C landscape, as well as they look after the digital currency as well, or the e-money in terms of the deposits, which is into B2B environment. And the CBDC is a union of both. Now, there's a big question about the central bank digital currency, that what will be the future of banks after the central bank digital currency? Whether an individual will have direct relationship with the central bank in the money management, or whether it will be distributed through the bank. And that itself is a very interesting topic. And I've got that covered in one of my courses, and I'll talk you through that. So why central banks are involved with the digital currency? Central banks are focused on the digital currencies for multiple reasons. They would like to build a payment landscape, a very robust infrastructure. They want to avoid the risk of a private payments and the private money creation, which is in flow as of today through the various cryptocurrencies. They would like to create a competitive environment for the innovation in payments. And basically, they want to meet the need of the digital economy in terms of the distribution, in terms of the availability, usability of the digital money, as well as they would like to address the declining and the cash in the market. We need to be really careful about when we talk about the digital money and the cashless society or the payments. Yes, we are moving towards the cashless society, but it's prudent to say less cash society rather than cashless society. Because the product and services, what we are building up today, it's not for the overall population, which is over 7 billion. These are mainly to cater a couple of billion population. So we got to be really careful about the digital exclusion as well. So the central bank digital currency is going to play a significant role in the building blocks for the cross-border payments as well. It's one of the most interesting topics that I love to talk about. Now, we have got a limited time, so definitely we need to move quickly as well. And reasons behind the growth. Yes, we understand the payments, we understand the rationale. Now, what is really happening? Why there is so much growth? And all thanks to technology. And if I have to pick up one thing, and that is mobile. Things have changed through mobile. If you can just look into this picture from 2010 to 2020, the mobile penetration in the market, specifically into the payments or the banking transaction, it has changed dramatically. Number of transactions to the digital bank, through the mobile banking or internet banking in UK market is far beyond the expectation. And that's a transformation that we have seen in last couple of years. And mobile is not only a channel. People used to walk into the branch probably once a year or a couple of times a year. Now they rarely walk into the branch because they walk with the bank. And thanks to the digital banks and the digital channels, they've got the services available on tap. not only from the payments or the bank account or the basic account services, but including the mortgages, investments, or any other their needs which are available through the mobile banking. So one thing which has really changed or transformed the payment industry is the mobile. And the second thing is about the e-commerce. The adoption of the e-commerce, if we consider this graph from 2007 to 2020, it has grown up significantly. So with the growth in the e-commerce, we have seen the growth in the payments, especially from the fintech perspective, or with the growth in the contactless payment, the volumes in the payment business have grown up significantly, and so does the value stream as well. Here's a very interesting part, the minimum amount. We talk quite regularly about the minimum amount, and that's what I said earlier. If you had to make a 50 cents transaction or 50 pence transaction, you wouldn't look into change. You'll just swipe your card, or you will just wave your phone to make the payment. And these are the previous news that you're seeing from the April 2017, that there was a view to impose a minimum transaction amount on a Visa credit card issued in the US territory. So when we are talking about these minimum payments or the small payments or the small change, let me clarify this. There's a huge transformation that is going through at the moment, and we are yet to see. And all thanks to the open banking, all thanks to the payments innovation, and all thanks to the card networks as well. When we talk about the fee, why there was a difference into the minimum payments as well as the small change earlier? Because it used to occur or attract the transaction fee, which has gone away. Because nowadays you can do account to account transfer, account to account payments. And on the top of that, even for the merchants, when you are buying something online, the merchants end up in paying a transaction fee called the MDR, that is the merchant discount rate. And let me clarify this again. In certain regions or the certain economies are very clear, and they have mandated that over the period of time, the merchant discount rate is going to be 0, so that they can fuel the growth in the digital payments adoption. And India is one of the countries that is looking at the 0 MDR over the period of time. So now the question comes down to that how the payment company is going to make money, how the service provider is going to make money. So the payment players, they started focusing around commoditizing merchants. They started creating the new value streams to generate revenue while providing services to the customers. And such examples are like Paytm, PhonePe. They are just a few in India. And all thanks to the UPI, which has fueled the growth into the whole payments landscape. Not only in India, UPI is basically unified payment interface. It has fueled the growth into the overall landscape in India, and it has influenced quite a lot of other projects globally, including P27 in Nordics. So this is a recent data. If you look into the top public payment companies revenue, from the American Express to the Visa to PayPal and Mastercard, and these are in billions. They are growing at a rapid pace. I led the future of payments at Visa years back. In 2010-11, I led the future of payments at Visa years back. In 2010-11, we used to process 60 to 80 million transactions just in the European market. If you ask that number today, that has grown up exponentially. There's no relevance. So these companies are growing at a rapid pace. And if you can see, these are dominated by US. Now we are going to look into the last topic of this short masterclass, that is the various methods, the payment methods. It is really critical to understand what are the payment methods. And I'm pretty sure most of you are using them day in and day out. Let's go through that. So the traditional payments like your cash, check, wire transfer, demand drafts, then cards, the card networks, the Visa, Amex, MasterCard, and the chip and pin. Then came around the contactless, the mobile payments, P2P. Now we are even looking into the wallets, and these are the payment wallets, which are associated with your cards and accounts. Along with, you have got a crypto wallets as well, which are available in the market, whether they are Ethereum based or Bitcoin or any other cryptocurrencies. Then you have got the multiple other alternatives as well. And the one of the most interesting is about the buy now, pay later. Yes, you have got Apple Pay, you have got Google Pay, you have got a variety of payment methods, right? And thanks to open banking, you've got account-to-account transfers, you've got RTP, you have got RFP, and the various other payment methods which are available. Over here, you are seeing as a UPI, which is one of its own kind of national payment infrastructure built up by NPCI, National Payment Corporation of India, and which has fueled the growth in the domestic payments in India. And now it has built up the partnerships in UAE and Singapore and going global. So when we talk about these alternative payment methods, they are growing. Now, as I said about the buy now, pay later, there are umpteen examples around the buy now, pay later companies like the Klarna and Afterpay and many others. At the same time, there's a consciousness around these buy now, pay laters because they are not regulated yet. So the consciousness is around, yes, they are offering the frictionless customer experience at the checkout and getting a credit to a customer, but that credit gets built up very soon in a short period of time, and that might push customer into a debt cycle. Now we can discuss that in contrast to the credit cards as well, because credit cards attracts the interest rates and they can push the people into the debt cycle as well. Yes, we can talk about these two products. But at the same time, credit cards comes with its own benefit as well. And they've got a restriction in terms of the credits available to the consumers. So let's not get into more detail about the individual product, but there are umpteen products available in the market and the methods available in the market for consumer to make payments. And that is one more reason for payment companies. That is one more reason for payment companies or the providers to provide various payment methods to the consumers. And that's why we have got likes of a Stripe, likes of a Primer, which is another payment orchestrator which is coming up into the market. So yes, we talk about the payments, we talk about financial services, we talk about banks. Yes, everything evolves and revolves around payments. Now here, I would like to really focus a few minutes on the financial inclusion. The topic which is closer to my heart, being an advisor to G20 GPFI, as well as being involved into multiple initiatives. I said most of the services, the platforms, the capabilities that we are building, we are keeping a couple of billion population in mind. Are we really building the products and the services for the whole society? And the biggest challenge what we have today is around unbanked and the underbanked population. There are multiple initiatives which the various governments have taken to address this challenge. India has opened 430 million accounts in last few years, focusing on bringing people into the mainstream financial services. And let me clarify this. When I say about financial inclusion, it is not only a challenge for developing countries. It is an existing situation even in the developed countries like UK, US, or European markets. Just the extent of the problem is different in the different geographies because of the infrastructure. And let me clarify this again. When I talk about the financial inclusion, it is not only a financial services problem. It is a public policy challenge which needs to be addressed together. The financial services just by themselves, they can't address financial inclusion. The question comes down to whether payment is a gateway for the financial inclusion. And in my view, yes, payment is a gateway for the financial inclusion because government in various geographies won multiple policies for underprivileged people. And one such initiatives like the G2P, government to person payments, just by enabling that, we can start addressing this problem to a greater extent. And we have seen that umpteen examples globally. And yes, I think about the unserved society quite a lot, but at this, yes, the underbanked is a challenge. Yes, the unbanked is a challenge, but at the same time, underbanked is a major challenge as well. So are we really creating a sustainable environment for people, those who can't afford the basic services? Are we really creating a sustainable society and the sustainable financial services, or the sustainable payment ecosystem? So the question is how we can bring people into the main financial stream, how we can make services available to them. I was just giving an example about India, and I've seen umpteen products and the services available in the market, which has improved the livelihood of millions of people. And thanks to UPI, the Unified Payment Interface, as well as the multiple payment service providers like the Paytm or the PhonePe or the other products and services which are available in the market, they have changed the livelihood of millions. And I would expect the same from the various other markets as well. So we are at the end of this short masterclass as a part of the digital payments in finance with CFTE. And if you like the content, we have got a detailed and very comprehensive course on digital payments in finance, which covers from the history to the future of payments. That takes care of the infrastructure, the business models, the payment strategies, as well as the future of payments, including the digital currencies. So if you're interested in that course, please visit CFT's site, look for the digital payments and finance course, and I'm sure you're going to like it. So thank you.
Thank you, Ritesh, for a wonderful masterclass and to the audience for engaging with the topic. If you are interested in learning more about the topic, CFTE has created the world-leading course, the Digital Payments Specialization. You can receive an exclusive 20% off the course. Simply remember to scan the QR code on the screen or follow the link sent on the chat. And if you are a Singapore citizen or a permanent resident, you are eligible for a 90% IBF subsidy. Have a great rest of the festival and happy learning.